Hey everyone, welcome back to the channel. I know the majority of the market is feeling a lot of pain right now, and it's understandable, but that is why I'm making this video today. I want to give you some reassurance that we're okay and clarify the intention of these crashes are to make you feel the way that we all do right now. And that as long as a few key things play out in the coming weeks, this drop in hindsight is going to look like a great buying opportunity instead of selling. So let's get right into it. What things are we seeing that are signals that the bull market is still alive? Well, first, the M2 money supply is rising, which is a front-running indicator of Bitcoin's direction historically by around 1 to 2 months. I want to just reference Colin Talks Crypto here in his YouTube channel because he gives the best in-depth analysis of this indicator. I would go watch some of these videos and get familiar with his analysis so you can better understand this. But long story short, the M2 money supply has been increasing over the past few weeks, and Bitcoin always follows it, just lagging behind by a month or two, which supports the theory that Bitcoin should be recovering back to the upside in the coming weeks. The second point I want to discuss is whales are accumulating Bitcoin at unprecedented rates right now. And the majority of the market stats show is that those selling are the investors that have bought in the past 2 months near all-time highs. The smart money may know something here because they are accumulating a lot of Bitcoin and maybe a new narrative and catalysts are just around the corner. The third point I want to touch on additionally is the weekly cycle low, according to cycle theory, is estimated to be today. Given this wick down, it looks quite accurate. And Camel Finance, who I also want to shout out and reference to go watch some of his videos too, is by far the best cycle theory trader, in my opinion, alongside Bob Lucas. And he has nailed cycle lows throughout this bull market. He set his expected cycle low at February 28th months ago. And this has played out perfectly. And what he expects in the following weeks to months is 150 to 170K Bitcoin. And it's essential to listen to the right people in this market. So I would highly recommend tapping into his videos and learning more about his technical analysis. He's a very disciplined swing trader and sticks to his strategy. The fourth point I want to touch on is that this drop for Bitcoin is not out of the ordinary if you've been in previous cycles. We've seen 30% drops not only this cycle, but previous cycles consistently, and a strong return to the upside shortly afterwards. Right now, we're currently sitting at around a 28% decline from all-time highs. And you can see even just this bull market, we've gone down 32%, and that retracement roughly 20% there, roughly 20% there. And let's go back to the previous bull market just to show an example here too. 31%. And even 2017 is probably the best example of this on how fast you can recover. And yes, the market is a little different here, being at larger market caps. However, 27%, 37%, 38%. And one thing just to reiterate is just as fast as we crash, we often see a reversal to the upside during bull markets in the same manner that we ran to the downside. This current drop does remind me a lot of the one back in January of 2024 here, where we saw a dip below structure here, and then we returned back to equilibrium and just took off from 38,000 up to 75K. And a main point to keep in mind here is that these drops to the downside are meant to reset sentiment, and it's sure doing its job right now. The fear and greed index is at practically all-time lows at 21, which is very rare during a bull market. You can see here in past consolidations, we didn't even get that low. Some are even showing lower in extremes of 10. So it's sure doing its job and shaking out a lot of retail traders that are new to the market. With all these points being said, I wouldn't be surprised if we see some catalysts starting to drop right and left, creating a positive sentiment towards Bitcoin very soon. I think we're near the bottom, if not already have marked the bottom with today's wick down. And one reason I believe this is that we never go as far as the most extreme bears are calling for. There is a CME gap further down towards lower 70K price range, but all the bears are eager to jump on that, and they're calling for that price right now. And yes, they usually get filled, but we have had CME gaps not close before, historically speaking, in previous bull and bear markets. The market always tends to settle somewhere in between the extremes of the bears' furthest downside predictions and the bull's highest upside expectations. And this is meant to prevent them from accumulating and taking profits, which causes a lot of frustration in the market, which is what the market maker's job is. I think we're in that zone right now where we've made some significant headway to the downside and returned with some strength here today. Yet still, you see the bears calling for these lower price targets, and I don't think they're going to get it. But now we're going to move to the technicals to discuss the confirmation we need to verify this so that we're not just catching a falling knife if the market does take a dive further. So let's start with the 2-month chart, as this is our long-term compass. Remember, we've been watching the stochastic RSI closely here. Let me expand this a little bit so we can get a closer look. And as we see now, which in my previous video we mentioned was a possible scenario, the overall trend is going to print a crossover, which is not good. However, this crossover has historically been known for pump faking and returning back to the upside in the following 2 months, just like we had with the Trump inauguration, which back here we had a crossover, and then these two strong candles pulled us out of that print. With that being said, this means the next 2 months are critical, and we're going to need to see some very bullish news coming out to push us up into that next leg, which would give us significant strength to push back above that crossover and maintain some bullish momentum. To understand the initial stages of a price shift, we're going to switch to the weekly and 2-week view. On the 2-week and weekly chart, we have a very similar story building here. The 2-week candle here will close this week on Sunday, and we would really like to see a recovery before Sunday night. And I do suspect that something may happen here to pull this up and get a wick down to the upside. We're just so exhausted and so far away from equilibrium. But what we're looking for here that needs to happen is in the following 2 weeks, not this candle, but the following one, we need to find some strength. And this is critical that the first 2 weeks of March recover strong. And then into this next leg up, we see a crossover on this stochastic RSI. These crossovers are very strong indicators of trend reversals within bull markets. And you can see this in many previous examples here. As you cross over and get this momentum, we push from the lows to new highs. When you cross here, lows to new highs. And you can see it very consistently when you get a clean crossover, it just starts a whole new leg up, especially towards the end of bull markets. Here, here, and let's go to the weekly chart because this acts very similar. The stochastic RSI crossover is a very strong trend reversal indicator. And if we can cross here and start moving into the blue zone, I suspect we'll make our way back up into all-time highs and those price targets we've been discussing. You can see here, out of the lows in this previous dump, and here as well. Now, on a daily chart, we've been consolidating around this equilibrium level that is noted by the green trend line right here, which is a very healthy sign until this capitulation to the downside occurred. And as you can see, starting around here, we made some headway above to the upside away from equilibrium. And then we returned to the downside for some time here, which an opposite and equal reaction was followed by the same length above from equilibrium that we previously met to the downside right here. And then we kind of equal out. Yes, we went down to this level, but we returned closer to equilibrium within this zone right here. And we thought we might go up into this and then come down for a cycle low, but we've completely dumped. And during bull markets, I think of these drops as a coiled spring. So the further that you pull back, what we will likely see is an equal and opposite reaction back to the upside throughout March. Not just back to equilibrium in this green zone, but a push well above it to balance out energy, which would require a move above this line, probably the same length that we dipped below this yellow line to the upside, which would lead us on the path to meeting our targets of 140K and above during April before we find a new consolidating zone. And if we can close this green candle on the daily chart above this previous green candle, I think this stochastic RSI on the daily should give us some momentum to potentially begin that very soon in the coming days dash weeks. Now, the last trend line I want to touch on again is the Bitcoin dominance chart. This is crucial for altcoins, and this has been holding for some time, this trend line. And we just keep retesting it. And once we confirm on a weekly chart a close beneath this, alts are going to be looking really good, and I think they're going to start taking up some market share. And as you know on this channel, we're invested in XRP and its counterparts into the next leg of Bitcoin's rally. Its counterparts being XLM, HBAR, and XDC that we are invested in. And as I emphasize that the edge is in the BTC paired charts, XRP is holding up very well relative to Bitcoin in these channels. And as you can see, this equilibrium price point that I've put some technical analysis into, we moved to a certain degree to the upside here, followed to the same degree to the downside. We then returned near equilibrium, returned to the same zone on the other side, and now we're just sitting right around equilibrium while Bitcoin chooses which way it's going to continue here. And XRP on its BTC pair chart has maintained this symmetrical triangle pattern very well here. You see the retest here. Every time we drop below, we recover back into this consolidation zone. And as Bitcoin recovers, I believe XRP will break out of this formation and continue higher, which is something we will keep our eyes on. But everything is dependent on Bitcoin's price action. And until then, we will see how it plays out. So to sum it up, we're seeing many consistent bull signals across key indicators. We're resetting sentiment, which is required for what we're preparing for, and that is a significant move to the upside. Don't let short-term volatility shake your confidence. We're on the right track. Thanks for watching, everyone. Stay strong and stay patient in this market. I truly believe if you can make it through the next couple weeks, you're going to be greatly rewarded. I appreciate your time. Subscribe and let me know your thoughts in the comments. Cheers.